Wednesday, February 12th, 2020, MONERO 64, home of alternative economics and contrarian views. This morning, I want to talk about the City of London and the threat to business as usual from Brexit to the City of London. I will go over, of course, what I mean by business as usual for the City of London and the international financial markets. I will reference an FT article about what's going on between the UK government and the EU as it relates to the City of London. I will reference a video that's really important that people watch, in my opinion, about the power of the City of London, entitled "The Spider's Web, Britain's Second Empire." I'll put a link to it below in the description and a link to it up in the card section. I'll also reference quickly a book entitled "The Empire of the City, The Secret History of British Financial Power." This book here. Before that, let's quickly look at where the markets are. Stock markets in the US remain elevated, firm, in spite of the fact that I keep seeing news that aren't great for the world economy as it relates to China and what's going on there with the outbreak of this virus. See a lot of headlines that don't look encouraging for the Chinese economy and consequently for the whole world economy, seeing that China is the second biggest economy in the world. Anyway, it's 8:11 a.m. London time. By the way, before I start, I'd like to say I did my interview with Lynette Zhang yesterday. It was great being with Lynette Zhang, Coffee with Lynette. I think the interview is going to be published today. And she actually asked me about what's going on with Brexit and the City of London. So hopefully this video will also help further clarify what's going on. Anyway, right now we've got spot gold, 1564.60, down about $3 or 0.2%. Range has been 1569 to 1563.50. Silver under pressure again here. We're at 1753, down 10 cents. Range has been 1750 to 1770. The futures, Dow futures, where would you think it is? Well, it's up. It's up 66, just under 0.25% at 29,340. S&P 500 is up 7 points. NASDAQ 100 future up 30, a third of a percent. The foreign exchange market, we got sterling 129.68, up an eighth of a percent. Euro is unchanged at 109.15. The dollar is a little stronger versus the yen at 109.87, and the dollar is unchanged against the yuan at 697.50. Crude oil is up strongly this morning. We're up 1.4%. WTI up 70 cents at 50.85. We dropped below 50 late yesterday. It's now back above that level. Notice that the bond market is correcting lower in terms of prices and the yields are going up. We're up another 4 basis points this morning. The 10-year is at 163. So we're up about 8 basis points this week, or maybe a little more. Saw that the testimony by Jay Powell yesterday. One of the things he said that was interesting was that he thinks Congress or the US government, the administration, should increase fiscal spending if there is an economic slowdown. They should come to the rescue. Why did he say that? He should be, how can I say, more worried about monetary policy. He's not an elected representative. He shouldn't comment on government spending. I think he knows when there's a next big slowdown, the Fed's gonna have to do a lot of QE, and they're running out of securities that they can buy out there. So buy increasing fiscal spending when there is a recession or a very sharp slowdown. That will give the Fed more paper to buy, more debt to monetize. But the interesting thing about his comment is that right now the US is running 5% budget deficits, which are not, how can I say, they don't correspond to an economy that is in great shape, to an economy where unemployment is so low. Usually this level of economic growth, supposed great economy, we shouldn't even have probably a deficit. So watch out if that happens. That will mean cost of living going a lot higher, more debt, of course. So let's go and look at the City of London. The best analogy that I can think of is that the City of London is the major or the most important casino for the too big to fail banks around the world. We know that they comprise banks from the US, Wall Street, some from Canada, a lot from the UK, City of London, a lot from Germany, France, Italy, Japan, even Australia, maybe a little bit New Zealand. So those are the too big to fail banks. And they all have offices in London. There's a note saying that there are more American banks in London than there are in New York on Wall Street, and that's true. I worked, of course, in the City of London for 20 years, and I can tell you that's true. There's Dutch banks, there's Italian banks, there's Malaysian banks from all over the world. And why is that? Well, because the rules and regulations for the City of London are very lax towards speculation. You can hypothecate or leverage as many times over as you want. As Lynette Zhang said yesterday in the interview, we also had a major deregulation in 1986 called the Big Bang, which attracted all the big international banks here. And the most important thing about the City of London is that the bulk of the offshore money in the world goes through the City of London, or is managed through the City of London. It actually stays offshore, but the City of London acts as an agent to these offshore tax havens. And the Bank of England turns a blind eye to this, of course. A lot of these tax havens are British overseas dependencies, sometimes still colonies, like the Cayman Islands, Bermuda, and others. So that's why what's happening with the EU as it pertains to Brexit, in my opinion, could be very important, not only for the UK, but the whole world financial system. It could create problems. And we know that the system is highly leveraged, of course. They are too big to fail. London is the center for the over-the-counter derivatives market. I know the American banks have a big chunk of the notional amount of these derivatives, but they're doing it a lot through here. Prior to Glass-Steagall being, how can I say, abolished in 1999, all the American banks were dealing in derivatives already, but they were here in the UK. And so are all the big European banks. And so right now there's a story out in the FT. It came out just yesterday. It says, EU rules out permanent access deal for City of London. So I'll go through this article and don't forget to watch the Spider's Web as well. So it says here, both sides risk losing out as each seeks autonomy over equivalence arrangements. So let's go through this. It says the EU's chief Brexit negotiator Michel Barnier on Tuesday shot down UK hopes of securing a permanent access arrangement for its financial services sector, warning the British not to kid themselves. His rebuff came less than 24 hours after a photographer captured an unreleased briefing paper that revealed Britain will be seeking an arrangement that locks greater long-term stability into any future equivalence regime. Equivalence grants EU institutions access to a non-member country's financial markets, provided that the nation's rules are equivalent to Brussels regulations. Treasury officials insisted Chancellor Sajid Javid did not expect the EU to certify British financial regulations as equivalent on a permanent basis, not least because the EU wants the right to diverge from the existing EU rulebook. But Mr. Javid does hope to persuade Brussels that the current 30-day minimum period for notification of a withdrawal of equivalence is too short, pushing back against the EU's strongly held view that decisions to grant or revoke equivalence can only be made on its terms and on a unilateral basis. So the article asks the question, how do equivalence arrangements work? Since the financial crisis, global policymakers have been working out the best way to supervise and punish global institutions that trade and move vast amounts of money across borders. That certainly happens in the City of London. It's the biggest center for foreign exchange. It's the biggest center for derivatives, over-the-counter derivatives at least. To accept business from the 446 million people in the EU, non-member nations known as third countries can ask Brussels to assess whether their regulatory systems are equivalent. The decisions are not a blanket coverage of all financial services, but are meant to be more stable and wide-ranging than using a rough patchwork of agreements. If Brussels decides third countries are equivalent, then EU entities can use financial services and institutions overseas without fear of possible sanctions. At present, only the EU has the power to hand out equivalence decisions, but the UK Treasury will gain it once the Brexit transition ends January 1st, 2021. The EU has handed out dozens of rulings to countries all over the world on areas as diverse as audit frameworks, exchanges, clearinghouses, and prudential requirements for credit and investment institutions. No jurisdiction has a complete set, although Japan, the US, and Singapore come close. So I'll skip to a part that is important here. And you see how the City of London is important to this international financial fiat currency system. So let's see. Why is the city worried? Asks the article. London is Europe's financial hub. So it's not Frankfurt or Paris, it's London. And therefore very sensitive to changes in the dynamics between the UK and the EU. Almost half of all debt and equity issuance for non-financial institutions in the Eurozone, and the Eurozone are the countries that use the euro, and remember that the UK doesn't use the euro, so we're not part of the Eurozone, between 2012 and 2018 was carried out by global banks from London. By global banks, they mean all the European banks, all the American banks, all the banks from all over the world. The fear in the city is that access can be revoked within just 30 days notice, something that happened to Switzerland's stock exchange last year. This puts another spanner in the works, I think. The fact that the City of London's status as it pertains to the EU is not really clear cut. that's why I think this whole Brexit process, I know technically the UK left the EU on January 31st this year, but things are not really sorted out. And I think the City of London's status is one of the biggest or most important factors, not only for the UK, but for the whole too big to fail environment, for the whole global financial system. Because as I said, the City of London is the Las Vegas of the global financial system. And to finish off, I'll recommend a great book for you to see how important the City of London is. The Empire of the City, The Secret History of British Financial Power, E.C. Nutt, K-N-U-T-H. So this is the book. And don't forget that when we talk about the City of London, we don't mean the whole of London. We mean the square mile. Look it up. Google the square mile. It's a small place, very powerful. It's an enclave, really. It's part of the Trinity, I would say. You've got Washington, D.C., which is an enclave. It's not a state. It's a district. You've got the Vatican as well. It's an enclave in Italy. It's sovereign. So is the City of London. And when William the Conqueror invaded England in 1066, he gave the City of London special powers, and they still have those special powers in the City of London. The Queen is not the sovereign in the City of London. They elect a Lord Mayor every year. And when she visits the City of London, he walks in front of her. So that's how powerful the City of London is. So I would say it's very important to keep an eye out for this development between the UK and the EU as it relates to the City of London. Not only for people in the UK, but all around the world, because it could affect the financial system in ways that we don't even know. If you enjoyed this video, make sure you hit the like button. Think about subscribing to the channel if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Facebook, Steemit, and DTube. I wish you all a great day. Take care. Bye.